certainly I think we've found a new floor. We're in a new level. I'm not sure, to be honest. I'm a little skeptical, but kind of this is it. The gold's going to, but silver's going to go to $50 or $100, you know, in the next month or two. But as you know, silver does have these very, very, you know, dramatic moves in very short periods.
Where we are right now, around above 36, it's going to be the highest closing level really since August 2011. So silver is looking very good. I would say that, yeah, 34.87 or that 35 level is the key level. Will they be able to get it below 35 today? I don't think so, but...
Gold expert Adrian Day has identified key shifts in precious metals markets, with silver breaking out of its trading range and establishing a new price floor. Day sees strong support at $30, with potential backing around $33, though silver faces resistance at $36.50, despite trading above $35.91. While encouraged by silver's breakout, Day remains skeptical about quick advances to $50 or $100. These conditions might include surging inflation or substantial supply shortages that fundamentally alter the supply-demand balance. Once silver breaks through the $50 threshold, that level may not represent the ultimate ceiling for its price potential. The gold market presents an equally compelling narrative, with Day observing a notable transformation in U.S. investor sentiment. American investors are beginning to return to the gold market after a period of relative disinterest, a trend that Day expects to strengthen considerably as economic conditions continue to evolve. This renewed interest in gold coincides with rising demand across multiple sectors, creating a supportive environment that mirrors the positive technical developments seen in silver. Institutional support for gold remains strong, with investors actively increasing their gold holdings in response to shifting market conditions. Research indicates that central bank demand will persist as a multi-year driver of higher gold prices, providing a solid foundation for continued strength. Beyond the immediate technical and fundamental factors, gold remains a generational store of wealth. Throughout history, it has consistently preserved purchasing power during currency collapses and periods of financial turmoil. It acts as a shield against the slow erosion of financial stability, often seen during times of monetary experimentation and economic uncertainty, the very conditions that could also drive silver to the extraordinary levels Day believes would be necessary for significant price advances. Before we begin, don't forget to like, share, and subscribe. 97.4% of viewers haven't subscribed. Join the 2.6% who have by hitting that button and turning on the notification bell so you never miss an update.
Gold has been remarkably resilient, and that's based on central bank buying, based on Chinese non-official buying. That's a large portion of the gold purchasing, and based on wealthy individuals, wealthy families in the Middle East and Asia and Europe who are just concerned about the fiscal situation and want protection. And that's without the US investor coming into the market. So I think as the economy changes, the US investor typically buys gold based on the economy and economic factors. And what we've seen for the last couple of years, a strong economy, low and declining inflation, high interest rates, relatively strong dollar, that's precisely the wrong environment to be buying gold. As that shifts, and we're seeing it shift now with the economy, also with the dollar, as that starts to shift, you're beginning to see signs of US investors moving into gold. As that picks up, you know, I think the demand for gold is going to be very strong. And whether the Fed cuts rates twice this year, whether we have QE or not, we're going to get something from the Fed on the easing side. You know, they're not going to be tightening by the end of the year, they're going to be easing. And that's going to be very, very... You look at the GDX, which is the largest gold mining ETF in the US, and it's had about almost 500 million of outflows in the last month. In the last month, it's had 3.2 billion of outflows this year. So you see in February, you saw a few days of inflows, and then in May, you saw a few days of inflows, but we're back to outflows again. So the sentiment is certainly not, you know, we can say they're certainly not pouring money into gold stocks.
Sure.
Yeah, but I think that's going to change. It's going to change as the economy changes. I think there's very little question that there has been manipulation in the gold market. Very little doubt. I mean, big banks are being fined for manipulating the gold market, for the silver market. But eventually, I think the market wins out. I mean, eventually the market wins out. People who I don't think there's a grand manipulation scheme among all the central banks and the big money center banks and the Vatican and the royal family to control the price of gold and the price of silver. I don't believe that. I believe people are just, manipulating the market in their own interests, just as, frankly, people manipulate the the stock market in their own interest by, heavy buying in the last 30 minutes of a quarter. I mean, that's been going on for years. It's nothing new. So silver, I think we've seen we've clearly seen a breakout, and I think we've got a new floor now. $30 looks like the new floor, and maybe even 33, but $30 looks, I mean, there is some good support on the chart at 33. So certainly I think we've found a new floor. We're in a new level. I'm not sure, to be honest. I'm a little skeptical, but kind of this is it. But silver's going to go to $50 or $100, in the next month or two. But as you know, silver does have these very, very, dramatic moves in very short periods of time, up and down.
Market analyst Mario Innecco has noted strong resilience in precious metals, with gold rebounding sharply after overnight weakness. Despite being hammered down to $3,247, gold recovered $16 to trade at $3,290 by morning, then continued advancing to $3,340 during European trading, posting over 1% gains for the day. This pattern of overnight weakness, followed by a strong recovery, suggests robust demand at lower levels, with buyers treating dips as opportunities to purchase, rather than signs of weakness. The ability to absorb selling pressure and recover quickly indicates underlying market strength. Silver approaches a potentially significant milestone, with Innecco highlighting that a close above $36 would mark its highest monthly finish since August 2011. He views this as a strong bullish signal, representing a breakout from over a decade of price action. While confident that silver is unlikely to fall below the key $35 level, Innecco acknowledges that market conditions remain unpredictable. The pricing relationship between the metals offers additional perspective, with silver trading at roughly 1/100th of gold's price. This makes silver more accessible to retail investors, while potentially offering greater percentage gains. Historically, silver has outperformed gold during precious metals bull markets, reflecting its dual nature as both a precious metal and an industrial commodity. Let's get back to the video.
Let's quickly look at the markets this morning. So it's 7:15 a.m. London time, and I went to bed last night. Gold was unchanged, but I got up this morning and I looked at X, and some of the people I follow were a few hours ago said, well, Mr. Slammy's been here, but I look at gold right now, it's up $16 at $32.90. But overnight, while I was asleep, gold got hammered down to $32.47. So it's rebounded really well. So did silver. We got down to $35.40. It's now $36.20. And of course, today is the last day of the month, the last day of the quarter, and the last day of the first half of the year. And gold last month, let's say in May, closed at $32.89. So you can see what's going on here. I would say the speculators, the technical traders that trade paper, even the bullion banks, they're trying to get gold down on the month, but I don't think it really matters, because if you look at this monthly chart, gold still looks pretty good. The other thing that I would say on the dollar index, for example, and I spoke to Michael Oliver about this in my interview that I published on Saturday, he said that the dollar index, if it closes below 98.34 today, that's a really bad sign. Not in terms of price or technicals, but more in momentum. So keep an eye on the dollar index. Right now it's way below that level. It's at 97.15, but you never know. Things can change. So 98.34, it's a key level. And let's have a quick look at silver, how it's doing technically. Let's see on a monthly basis where we are right now, around above 36. It's going to be the highest closing level really since August 2011. So silver is looking very good. I guess there's still time for them, Mr. Slammy, to come back and slam the price of silver today. But I would say that, yeah, 34.87 or that 35 level is the key level. Will they be able to get it below 35 today? I don't think so, but anything's possible. We'll have to wait and see. The debt ceiling situation to be resolved. This big beautiful bill, if it goes through the Senate, it will have to go back to the House for some changes, and then Trump will have to sign it. And apparently the debt ceiling will be raised by 5 trillion if that goes through, so we'll have to see. But there will be a lot of debt to refinance, so Mr. Trump is between a rock and a hard place at the moment, because foreigners are abandoning the dollar, not completely of course, but they're trying to find alternatives like gold, the Swiss franc, even the euro. And why do I smile like this? Or even the pound, because the euro, the pound, even the Swiss franc, I mean, they're not great currencies either. They're just fiat currencies. I would stick to physical gold, of course, but people still seem to believe that
Gold remains a reliable store of value, supported by global demand and shifting economic conditions. Silver, with its lower price point and historical tendency to outperform in bull markets, presents significant upside potential. As both metals respond to growing market uncertainties and weakening currencies, they remain essential assets for preserving wealth and capitalizing on opportunities in the evolving financial landscape. Will silver outperform gold in the months ahead as market pressures build? Share your thoughts in the comments. If you found this video valuable, give it a like, share it with others, and don't forget to subscribe. Only 2.6% have, so hit that button and turn on the bell for more insights on gold and silver.